everybody, welcome to the Trader Merlin Show. It is your weekend edition. Hope you had a great trading week out there, and given the way these markets have been selling off, I know some of you are on the bearish side of things, which probably did rather well today. So cheers, everybody. Happy Friday. A nice frosty beverage to you all out there. I figured, since a lot of you ask what I'm drinking, and Alpha wants to know if I'm drinking tequila, not my drink of choice. I'm more of a whiskey guy, although I may have a couple shots of tequila later on just because it was a hell of a week. I figured I might tailor my whiskeys. I told you usually was tailored towards my trading results for the week. Today was a pretty good week, or this week was a pretty good week for me. And I figured this is in honor of Tesla. I'm having a nice glass of Slaughterhouse for Tesla this week. People sent me a message this morning saying, hey, don't you wish you would have held on to your Tesla another day? Sure, guys. We can always go back in hindsight and say, yes, I wish I would have held it. But honestly, the rate of return that I achieved in under 24 hours was well worth it. So I'm not even remotely concerned with money left on the table. Yes, I would have doubled my rate of return, but totally happy with what I made, and that's the beauty of trading. Got to be happy with what we got and take it when you get it. So, hello everybody. Cheers. Hope you had a great week. I'm going to start things off with the title screen here, which is all about that trader Q&A. And of course, this is the focus for today. Is going to be looking at questions. I have a bunch of them coming in. Probably you guys like the picture better of me with the cocktails on the beach. I do like that better myself. So let me real quickly run through what happened out there today. We'll look at some of the overall markets, and then I'll go into listener questions. I've got a few of them lined up. So for those of you that sent them in, thank you so much. Alpha Intelligence, you're talking about the Terramana. Yeah, you know what? Everyone keeps raving about it, but I have him on my Instagram feed, and I'm just getting sick and tired of The Rock because that's 99% of everything he posts is all Terramana. But I'll have to have a glass someday, that's for sure. Here's what we had for the week. I don't need to run through them all. I'm just going to briefly go through them. You have Russell 2000 was clearly your worst performer this on Friday. For the week, still down. It wasn't the best week out there. It was trying to get back to those highs from June. Didn't make it. We're down 1.62% today. NASDAQ, it's also suffering, and there's a bit of weakness. Intel certainly brought this down a little bit. Tesla as well was down another big chunk today. I'll show you that chart in just a second. But NASDAQ overall for the 100 down 0.83%. S&P also down 0.74%. Looking like it does want to have a little bit more of a sell-off here just because of how we're responding to earnings, because of Tesla, Intel. We have Microsoft as well. It looks like some of the pieces that were bringing it all up are starting to slowly bring it back down, which is that double-edged sword of having just a few people lead the charge. Bitcoin. Showing right now it's down 0.5%, but all in all, it's been doing rather well. We are right at that trend line that we talked about on yesterday's show. It was actually down 0.05%. Gold, this is the big story. Back above 1900. It hasn't been there in quite some time. Ripping to the upside again, continuing this beautiful streak. We had talked about on the show, I think it was, Brendan's not here, but I think it was back in January, we were talking about how if it was... I think we were all talking 1800 was the target, and then even after that, I think some of you were actually looking at loftier goals. Well, 1900 is where it's at right now and continuing to rip. Crude oil is right back to that top line. I mean, it's just barely trading sideways here in a very, very tight condensed range, 0.66% gain on the day for crude oil. Now, let's take a look at Tesla real quick, because this has been, part of this, or one of the big stories today was Tesla. I mapped out this today. If you look from its peak last night on earnings, when it came out with earnings, to where it's at, the bottom out today, you're looking at a 20% drop in Tesla in 2 days. And it seems incredibly dramatic, but look how much it moved up in a period of time that's very similar. I'll even map it out. We'll say from this low on the 29th of June to its peak, it was an 89% rally in 14 days. So, a 20% drop in 2 days should come as no surprise. The old phrase, what goes up must come down. So that's looking good for more short side. However, there are people who have been messaging me asking about this level right here, which is where we kind of bounced at today, the 1400 mark. Yeah, I think if that holds, then you'll probably see it continue to move to the north side. Again, it's, in my opinion, very overvalued. I think you've got a very overvalued company right now based off of their PE ratio, which is getting rather lofty. So Tesla, major player out there today. Intel as well. We also have a question on Intel coming in a little bit, which I'll answer later on as I run through this stuff. There's your Intel, which, of course, really hurting the semiconductors today, which was a lead dog for most of this market rally to the upside. So let's go and start diving into some listener questions out here. I've got a lot of them to get through. It's going to take me probably the full hour to get through these guys. Of course, if you have more, send them on and I'll do whatever I can to get through all those questions for today. Ooh, Lordy, that slaughterhouse is strong. Okay, so let's start things off with airlines. The question that came in was from Gary. Gary says, what do you think of airline stocks, specifically Southwest Airlines? This is a challenge for me. Airline stocks, it's a crapshoot at this point. I know that they've been beaten down. I'll look up Southwest Airlines here in just a second. But let's look at a few of the major players out there. Here's Southwest Airlines, LUV, right? It doesn't look anything special. It's just been traversing sideways. Actually, to me, been drifting down a little bit. It's been making the same lows for about a month and a half, but lower highs. That's a sign of weakness. And I think that we would all agree at this point that most of us probably aren't going to get on an airplane unless it's A, the most unbelievable deal we've ever seen in our lives, or B, there's some sort of emergency, or you just have to get on an airplane. Most of us are probably avoiding airplanes at this point, regardless of what your stance is on COVID and the contagiousness of it and the death rate. That's a different story. I think all airlines are going to be struggling here. Southwest, if you're asked specifically, Gary, about my thoughts on Southwest, I love the airline. I think if anybody comes out of it strong, it's going to be Southwest. They've always had great leadership and been really good with hedging fuel costs with futures, etc. Now, the chart-wise, though, it does not say anything nice, right? It's basically saying if you think you want to buy it, you kind of have a buy point maybe right around this $31 mark, which is where it's very close to. But I'm not confident in that level. I feel like it's just going to keep drifting down lower here. Now, there's other ones. How about JetBlue? Here's JetBlue, which has the same picture. Here's United Airlines. Same picture. Here's American Airlines. All right, American Airlines actually looks weaker. And then here's DAL, Delta. Same picture. What I would recommend if you're thinking about buying into the airline industry, Gary, or other people who think, hey, I'm bottom fishing here, right? I'm making a play that might last me a couple of years until we get out of this, which we will, and then all of a sudden people start traveling again. I probably wouldn't go with a specific airline. I think that there's too much risk involved with that right now. If you are going for them, my assumption would be to go with the big names. Obviously, your United, your American, your Delta, your Southwest. Those would probably be the main ones. If they get bailouts, they'll survive, and a lot of the small stuff disappears. In order to prevent that sort of risk acceptance of individual securities, you could go with an ETF that tracks airlines. I believe JETS is one of those. Here's your Jets ETF. You notice it looks just like those airline stocks because it has most of them. I mean, there's a lot of overlap here with regards to the companies. This ETF has all those majors, Southwest, Delta, United, American, but it also has Allegiant and Cargojet, Alaska, Air Canada, JetBlue, SkyWest. There's a lot of different companies in this, Hawaiian Air, and I think that would help you, Gary, in spreading around that risk, which is what I would certainly be looking to do unless you are an aggressive speculator like myself. I would probably go with that ETF that represents a market sector. Yes, you're going to pay a small fee, right? There's generally going to be an expense ratio or a fee with that. I believe it's about 0.5% for that ETF, so it shouldn't be anything that really drains your account. But I think that there's a lot of opportunity in the airlines. I just don't know how long it's going to take for them to get out of this malaise that they're in, or for us to get out of this giant problem that we're in. Randall says, American Airlines has a lot of debt. Yeah, I don't really look at all the fundamentals. I'm not really sure what the numbers look like, which is why I would personally spread around the risk. Now, that said, there are different types of investors or traders out there. Some of you, like Randall, you may be very, very, very into the fundamentals, like Larry Jacobson, who I'm trying to get back on the program here. He says he has a new stock for his portfolio. He's going to want to look at those fundamentals. And what's nice about those who study fundamental analysis, which I'm a fan of, I'm just not good at, they'll line up these four airlines, United, American, Delta, and let's call it Southwest, and look at all those factors. Okay, what do the earnings look like? What's their debt? What's their capital requirements? What's their shareholder equity or return on shareholder equity? All those numbers become very, very valuable. And unfortunately, I can't remember the gentleman's name. I actually asked him if he wanted to be on the show. Let me see real quick if I can bring this up. I found this guy recently on YouTube who goes through and he will break down fundamentals on companies. And the guy does a phenomenal job. I think it's called the Investor Channel. Bear with me 1 second as I bring it up. Yeah, here it is. If you guys are interested, I think that this would be a good resource for that. It's called the Investor Channel on YouTube. You'll notice down here, he'll go over all kinds of different stocks, and he really breaks apart the fundamentals. And notice you had Microsoft, this was yesterday, Intel he did today. So if you are interested, this might be some food for thought. He doesn't go through and try to scare you out of anything. He just actually just says, here's what I'm seeing on the balance sheets, the fundamentals, and I think it's a great resource for those of you who might be interested in fundamentals but not experts at reading fundamentals. So anyway, thought that might be of benefit for you guys. It was a really cool channel, but I'm not that guy. I'm not the one who's looking at all those fundamentals. While they're important, I just don't have time to dig through and compare them all. But like Randall said here, they have a lot of debt. That is certainly a factor. The more debt they have, we talk about this coming up as a problem, is the corporate debt market. If corporations can't service that debt, that corporate debt, then they're going to have issues. And then all of a sudden things start to fall apart, and either they get some bailouts or they go BK. And airlines, given the way things are going right now, some of these might be going BK here rather soon because they just can't keep up the overhead or even the debt payments that they have because they have no income coming in. All right, let's see. Next one on the list. I'm going to try to go rather quick, guys, just so I can get more to the viewers' questions because I see you have a bunch here. Let's see. Yeah, Big Ed, we'll look at AMD in a second. I'll talk about Intel here. It's actually the next question. Let's see, what else do I have? If you want massive hangover, try Jose Cuervo. Yeah, my college days are long gone, my friend. Jose Cuervo is a last resort. Yeah, Tom Barr says 20% is just a couple candlesticks. Yeah. It's crazy, though, to think of how much money that was, right? If you look at how much money Elon Musk lost in the last couple of days, I'm sure he's just gone, big deal. I'll make up for in the long run because he's got a much grander vision. But yeah, incredible move out there with Tesla the last couple of days. Just remarkable. Okay, next question came in from Armando. Armando, thank you so much for this question. Very timely. It came in this morning. What are your thoughts on Intel? Would you buy? Oh, this is a really tricky one. Now here, I'm not looking at fundamentals. Again, for those of you who know me, fundamentals is not really my area of strong suit. I'm more of a technicals guy. However, I am going to start looking at different numbers within, let's say, technical comparisons. So like I would do a fundamental analysis if I want to do, I'm going to do a technical analysis of a bunch of different components. So let's start with the overall chart of Intel. Intel got butchered this morning, right? I mean, if you say butchered, it's not as big of a drop as, money-wise, I think, as we saw with Tesla. But certainly jumping from, $61 all the way down to $50, that's a pretty significant drop of 16% in one day. And look at the volume. It averages about 26 million shares per day. It hit 180 million shares today for Intel. That's a massive shift. That's a lot of people moving out of this. That's probably a lot of hedge funds saying, 6 months late on your chip discovery, we're dumping you. And I think you saw a lot of that today. So the question becomes, rightfully so for Armando, is where's your buy point? What do you think? Well, before I dive into that, I want to see how impactful Intel was on the sector. So what I wanted to do is start off by doing a kind of a step down comparison. If we look at the overall markets, this is the overall market. The black line here, I'll make it much bigger for you guys to see. Make it a really big, bold black line so it's obvious. And there you go. So the real thick black line here is the S&P 500's return, or SPY's return, since January 1st. Right now down about 1.21%. You notice that there's two markets up here that are ripping, like just way, way above market. And that is technology in blue, that's XLK, excuse me. The technology ETF, which of course has a lot of the .com stocks, and we love those. And then this one right here, I can't tell you what color it is, but second one from the top looks brown or green or something like that. I'm colorblind. This is SMH. This is an ETF for semiconductors. Clearly, we can see that semiconductors have been a major force in this market moving to the upside. It's up 10% on the year right now, while the market overall is down 1.2. So clearly, it's been one of the main factors. So we can break that apart even further. What I did is I took some of the top holdings of SMH, right? We can see since January, it's been very strong overall. But within that, what's moving within semiconductors? So I have that one over here. The solid black line you see on the screen is SMH. It is a little bit off. Let me put that as my baseline. I have it one candle off. I want to make sure it's exactly apples to apples. And it's showing that 10.21% is the rate of return for SMH this year. But notice how within SMH, okay, so what I'm looking at here is fractal nature. I have the overall market, which is the S&P 500, And then I have semiconductors, and now I'm picking apart what is moving semiconductors. So this is like taking, a leaf and looking at it under a microscope and then going deeper and deeper and deeper into what's moving that particular market segment. So here you have the SMH. This is some of the top holdings of the semiconductors. I will make this fonts a little bit bigger here because I know it's a little hard for you guys to read the names. I apologize. I didn't think ahead and map all this stuff out, but let me make it bigger for you just so you guys can all read the fonts. We'll call that a 16 bold, and now you'll be able to read the headers across the top, which will tell you the name of the companies. Hallelujah. Okay, so the black line is Semiconductor itself. The top line here, I guess you guys can all see the colors now. I was going to ask you, what do you guys think? Who do you think's the big leader here? The big leader right now, NVIDIA. One of Larry's darling stocks in his portfolio. NVIDIA's up 69% on the year, and it's what's moving. It's what's pulling the whole SMH up. Now, you also have two others here that are right around 40. That's going to be, what company I got there? Oops, excuse me. This dark purple line here looks to be about 42% gain on the year. That's Cree, C-R-E-E. A lot of you probably haven't even heard of that one. And this blue line here, which is going to be AMD. Of course, AMD really catching up in the last couple of days. AMD's been a phenomenal move over the past few days. But other than that, you look at it and go, well, where's Intel? What's this lowly straggler down here on the year? 16%, down 16% on the year. And that, my friends, is Intel. So if you look at what's moving semiconductors, which has been what's been moving the market, Intel has not been really participating. It has not been one of the main drivers. Now, of course, we could make the assessment that Intel is an older, mature company that's past its prime. I disagree. I still think that they're the main player out there, one of the main innovators. Them and AMD, I think, are the driving forces in the chip markets. So for Armando, it's a question of, do you want to buy it here? Well, we can look at a couple different things. First off, let's bring up the chart of Intel and say, would you want to be a buyer here? And if not, where would you want to be a buyer at? Let's go back big time and look at the weekly time frame here. Okay, you can tell that Intel really hasn't been that great. Honestly, for the past 3 years, while it is a huge range going from 45 up to almost 70, it's just been bouncing and chopping back and forth and back and forth. There's no strong, clear, distinct uptrend like we've seen in some of the other markets, especially what we've seen this past week. So if I look at this chart, I think I would be speaking for myself, and you guys feel free to chime in at what levels you might be interested in here. I would look at this and say, if Intel gets down to, let's call it 47, maybe a little bit lower if I'm going to be, I'll probably go lower. I'll say 40, 45, and 45, 50, then I'm interested. And I think that you guys can see that for a long time, Intel appears to have difficulty kind of getting below that $45 mark. Yes, it's gotten below it a few times, but all in all, this little yellow area seems to have been supporting price. So I would probably be okay buying Intel if it drops back down to those levels, even with their big delay, right? They're talking 6 months late for their chip, or 6 months behind on their chip. Here's what I think is going to happen. I think that you're going to find a lot of the other companies are in the same predicament, that factories around the world are slowing down and the delivery time or the process time is going to be delayed. So I look at this one. I don't need to pull up a market to tell you that right now this is way outside its lower Bollinger Band. I can just tell you because of price. It's down below its 20-period moving average. It's probably down below its 50-period moving average right now. If you want to just see those numbers, why don't we just entertain everybody? Let's go Bollinger Bands. Oh, that's a weekly. Okay. Well, it's almost out on a weekly, which is extremely hard to do. On a daily, it's way outside the lower Bollinger Band, right? Are you at any area over here right now that would say to buy? I don't think so. So Armando, I wouldn't be a buyer of Intel right now. I think that it might be in your best interest to look at Intel as a potential buy coming up here, but what I would be more inclined to do is I would be looking at maybe selling a put or multiple puts here, right? Volatility is probably going to be pretty high. Those puts are probably going to have a nice value to them, and maybe you make your target down a bit lower, right? Let's go down to these low points here. Let's go back to the weekly. My option chain is not going to give me great prices right now, but let's say you wanted to buy if it came all the way down to this zone, and let's find out what the real low point here is on this one. The lowest point that I would be interested in is 42.63. So what if you went out and sold a $43 put? The $43 put's going to put you right at this line, this little black line that I have on the screen, and don't worry, I will take some of this stuff off because I do realize that it's starting to get a little bit cluttered here. But I'll put the weight, this nice black line on your screen, take off these Bollinger Bands, and now you guys can see we'd be pretty much down below that area of demand on the weekly. you would be collecting premium, probably not too much. Let me see if I can, I don't even know if it'll give me accurate options data right now in the after-hours session. You know, they're going to be obviously wide spreads, but it could give us a ballpark as to how much we could get for Intel for, let's say, a month. And I would just go sell monthly or weekly options at that $43 level and be generating income, if that makes sense to everybody. I'm hoping it does. And therefore, you could generate an income stream. Let's go. I got the option chain up, so bear with me as I type this in. INTC. And I'll bring it over here. My guess is I'm not going to get a lot of good quotes. But if I go out to August, which is the monthly options contract, and I pick 43 is what we said. You can do the 42.50s. You'd be making only 22 cents. You wouldn't be making much money. I'd probably go for the 45s and double my rate of return. Okay, so if I go to the 45s, which would be up here, I'm still buying in that demand zone, and I'm getting myself a little bit of premium for taking that commitment to buy it at a much lower price. I would probably be more inclined to do that than I would to buy it outright. I just feel like Intel could continue to fall here. I do think you're going to maybe see some more weakness in the entire industry for the overall markets. I think the markets are going to have a little bit of a pullback, and we might see some more downside movement. So that's my take on that one, Armando. Anybody else? Anybody got any thoughts on that one? Any commentary that might change my opinion? Or let's see. I'm going to refresh here. My chat keeps freezing up on me, so apologize. Big Ed says, I wait until after AMD's earnings call next week before buying Intel. Sure. I mean, AMD obviously is going to have an impact, and geez, judging by what's been going on with AMD, I wouldn't be surprised to see them rock to the upside. Let's bring up AMD here. There's your AMD chart. Now this, I mean, talk about a tale of two companies, right? Intel has been the awesome dog for so long. It has been the benchmark, right? So I'm going to put this down here on a weekly time frame. There's AMD at the bottom, and you know, people want to buy Intel because it's Intel. Well, I don't know. I'd be more inclined to be buying AMD right now. Regardless of who makes better chips, I don't care. Look at Intel on a weekly on the top, and then look at AMD on the bottom. If we were to go from the lows in April, right, the bottoms in April of 2018, which I'm going to map out here, to where it closed at this week, 666%. Any that you were into demonic numbers there, that's kind of an odd number. If I go to the low that happened a little bit earlier on Intel, and go to where it closed at today, you're looking at a gain of 20% in that same period of time. So clearly AMD is on a roll, right? They might be making better chips, better earnings, better management. I don't know what the numbers are telling us, but clearly AMD looks like the better play here. And if their earnings are next week, that could certainly crush Intel even more. All right. Sure. Guys, next, by the way, for all of you that might be not paying attention to earnings announcements, we have major earnings announcements next week, like monster stuff. Next week, how about this? I wish I could give you guys prizes. I just don't have any prizes. But just for fun, how many companies report earnings next week? I'm talking Monday through Friday. How many companies are reporting earnings? If I can think of a prize, I need to at some point start making some shirts or some tchotchkes or some weird stuff that I can send you guys. But type in the chat. What do you guys think? How many? I actually thought about getting the Don Fron on the show. How many earnings coming out next week, guys? We had 480 something this week. 47, Joseph. Not even remotely close. I think there's 47 on Monday alone. So, Big Eb says 225. Mike says 400. You got a ways to go. It is a huge week with regards to earnings. And not only is it a huge week, guys, but Thursday night. Thursday night is the night of nights. It could create an unbelievable Friday. Now, when I say unbelievable, I don't know whether that is going to be a parabolic move straight up or one of these apocalyptic fall off a cliff to the straight south side. I don't know. But you have 3 FAANG stocks. You got the AG, Apple, Amazon, and Google all reporting earnings after hours on Thursday. That is going to be one hell of a show. Load yourself up with some popcorn, my friends, because that's going to be crazy. Yep. Jeffrey's the closest. Rajesh says 4,000. Not quite that many, my friend. That would be a busy week. Well, hey, David, if you talk to him or message him, just say, come on Merlin's show. I'd love to have him on, absolutely. There are 902 companies reporting earnings next week. 902. And I'll give you some of the names. Monday, you've got Visa, Pfizer, McDonald's, Amgen. You have Starbucks. That's Tuesday. Wednesday, Facebook, PayPal, Shopify, Boeing, Qualcomm. Thursday is Amazon, Apple, Google, MasterCard, Procter & Gamble, Eli Lilly. And then Friday is oil day. You've got ExxonMobil, Caterpillar, Merck, Phillips 66, and Chevron, I believe. Basically a ton, a ton of stuff with regards to earnings. So it'll be a very fun week. Okay, so Armando, that's my take on Intel. I agree that you probably should wait until AMD's earnings. Either way, I think selling puts is a great way to make money off it right now. If it doesn't drop to that price, let's bring up that Intel chart again. To me, this is one of the beauties of trading options. I'll put on this. No, I actually have it right there. If you're selling those 45 puts and collecting, $40 per contract, it's not a lot of money, right? But it's also Intel. You're generally not going to see it move like it did today, $10 swings. You don't usually see that. But if it doesn't get there next 30 days, well, you get to keep that premium. Fine. Maybe you can do weekly options on this bad boy and just keep selling. If you wanted to be a buyer at 45, just keep selling those 45s. If it gets down there, you're executed. If not, you're collecting premium, making money on something you wanted to buy anyway. I like it. Yeah, you're right. With the closest without going over was Tom Barr. That's you, my friend. Winner, winner, chicken dinner. Okay, let's go to the next one. This is an interesting one. Next question comes from Abdullah. Abdullah says, I have a membership with Sentiment Timing, and I would like to share their trade idea with you. So here is a couple of picks. I hope it's helpful. First off, Abdullah, it was very difficult for me to read your pictures because they're from a cell phone. I actually did blow them up on the screen here, which I'll show you. Difficult to look at, okay? It's challenging to see, but I wanted to explain something first. On Power Trading Radio years ago, I did a thing on Elliott Wave, and I want to start with that because pretty much your Sentiment Timing site, Abdullah, that's all this company is. And I know I'll ruffle some feathers out there. It's not like me making a political statement, which I certainly will not do because I don't want to alienate anybody, but I'm okay to alienate people with this thought. Elliott Wave theory is like a cult. The belief behind Elliott Wave is that everything moves in waves or cycles. I have to raise my hand there. I actually do believe that. I believe that there's patterns. If you talk to anybody who's a surfer, waves come in 3s, 5s, or 7s, and usually a certain wave is the best of the set, and those patterns repeat. So as a surfer, you know how to read those waves. You ride that third wave because that's the best one. Great. But Elliott Wave people will constantly change their viewpoints of the market based off the next candle. So, here's what's going to happen, and all of a sudden it doesn't work. But now we'll just remodify our lines. I get sick of Elliott Wave practitioners. I'm sorry if you're an Elliott Wave guy. You drive me nuts, and I'll show you an example here why on this market. So if you don't know what I'm talking about, Elliott Wave looks like this. It's a belief that markets move in cycles. 1, 2, 3, A, B, C. And what we're looking at here, and let me grab my pen. We'll do welcome to art class, kids. Today we're talking about Elliott Wave. Your first move up, this first one is, they'll call the first leg, goes to 1. Then it has a retracement, 2. In my opinion, you're better just to focus on that piece, an impulse and a correction. I'll put an I, that's an impulse, and this one here's a correction. And that's what the Elliott Wave is based off of, this combination of impulse and correction. That's it. So then Elliott Wave believers say that it moves in a period of 5 up moves. So you have 1, 2, 3, another correction to 4, and then 5. So it's, 3 up moves. And then once that pattern is completed, you get a retracement in the market of 1, 2, 3, or as they'll say, ABC. So the market, their belief is that the market always moves up in this period of 1, 2, 3, 4, 5, and then a pullback of A, B, C, and then it starts all over again. To show you the fractal nature of markets, which I actually do believe in as well, if you notice the picture I just drew here, we can go one step further. And now, I want you guys to look at the move from 1 all the way up to 1 and then down to 2. Within that move, from 1 up to 1 and then down to 2, there could be... Oh, I put it backwards. Son of a biscuit. Damn it. I thought that I had this really well thought out plan, guys, and I didn't execute. But here's the basic nature of fractal markets. Those are all the same picture, but within those moves, there is Elliott Wave within them. And this is where Elliott Wave practitioners will always make excuses and say, well, it should have been to this point or this point. Here's the charts that are, I'm going to get the gentleman's name, was back here. Where is it? Abdullah. Abdullah sent in this one here. So here's the chart. I know, guys, it's absolutely horrible. Let me hang on that one. I've got a phone ringing in the background. I got to love it when stuff's ringing in my office. I know you guys can't read it. This is the S&P 500. He's got SPX up here, and you'll notice that it's written here. It says, and I don't know where it starts. 1, 2, 3, 4, 5. Right? That's what the Elliott wave is drawing, and then it has A, B, C, which now means we're going to have a 1, 2, 3, and starts all over again. Well, to me, and it will go forward here, they're basically forecasting, based off what they see in these markets, that this most recent sell-off, the huge sell-off that started back here in February to the lows in March was your A. The market rally back up to where we are right now is your B, and they're forecasting a major market sell-off to C. Here's why I think that's a joke. An absolute joke. And I'm going to go to the regular charts here because I think it's, let me just draw it here. I want you guys to notice that this whole move right here, I'm putting in the giant red box, right? You guys all see that? I'm hoping you do. That big sell-off in January or February, end of March and mid-March, they're calling that whole thing an A, right? But here's why I can't stand Elliott wave practitioners, because what they will do is they'll do this. Let's go back to ES, and we'll go back to a daily. What they're going to do, and you'll see it happen all the time, is they will say, and we'll get my trend line tools here. I don't need to use snap. I'll leave it in remain mode. They'll say, okay, it had its big move up. Here's your A, your B, and then your C, right? But if that didn't work, they would now change their whole thing and say, I can't take these off, and then say that this is now an A, right? They will keep changing their perspective of what's going on with the overall market. It just happens again and again and again. Where, for example, let me show you, we'll take out a drawing mode. I'll delete some of this. I'm probably getting on people's nerves with my drawing skills because my drawing tools in TradeStation are a pain in the butt. There's so many other platforms that have better drawing tools than TradeStation, but I got to use it because that's what I got. So let me just show you on this move up what I'm talking about. An Elliott wave practitioner would say, okay, I'm starting at the bottom. I've got my 1, 2, 3, 4, 5. And now they would say it's ready for a correction. You guys all see that? I'm just putting it here to show you why they drive me nuts. That's what an Elliott wave practitioner would illustrate. And look, we can make the argument, yeah, it's had a 1, 2, 3, 4, 5, and now maybe we get our ABC. Oh, well, it didn't quite do it. So you know what? We're not going to call that our formation. It's now different, right? This is where they'll start changing their plan right away. And this is why I can't stand it. They drive me absolutely bonkers, is they will now take these lines and readjust them to fit whatever the picture says. So it's no longer that one. Now they'll go, oh, well, it was a 1, 2, and now, oh, maybe this is the 3. And then this was 4 down to here. And now, oh gosh, yes, now we're on that 5th leg. Okay, now it makes sense. Oh, but wait, it didn't work. And then they'll change it again and again and again. As Big Ev says, torture it long enough and it will tell you anything that you want to hear. So, Abdullah, I apologize if I didn't go through your picture specifically. I don't think you need this sentimenttiming.com. I don't think that you need to pay for this service. I just think that you need to look at price. I think we could all agree that given the move that's happened, there should be a market pullback. It goes without saying. That said, this market trend is still really strong. I mean, you kind of still have to look at this from a bullish perspective because it's making higher highs and higher lows. I don't care what wave we're on, whether it's wave 1, wave 50,000, or 500 million, I could care less. All I want to know is, where's it going to go next? What's the probability? Is the probability higher that this market on this chart, whatever symbol it is going up or going to be going down? And the question is, what time frame? Are we talking about the next couple days? I think it's down. Are we talking the next couple weeks? It's probably going to move to the upside unless something breaks with the overall trend, which has been up. You guys see all that? And Jeff, you're absolutely right. If it's done after the fact, who cares? And normally that's what these Elliott wave practitioners are doing. They're trying to come up with an estimate as to, hey, you know what? It's going to turn here in the near future. I'm trying to anticipate that turning point. You know what's easier to do? It's easier to look at supply and demand, because what turns price? A theoretical, hypothetical, spiritual, tea leaf type of intercelestial, tarot card reading chart of 5 waves and 2 pullbacks? Or actual buyers who turn price? In this picture, obviously, buyers are winning. On the right-hand side, obviously, since March. There's no reason to change that perspective at this point in time. So now it's just a question of where do you want to be a buyer at? And then also, where do we change our perspective to become a net seller on it? That is really the main point here with these charts that Abdullah sent in. And sorry if I sound a bit crass. It's just, an Elliott Wave practitioner to me is somebody who doesn't really make a lot of trades. They're always doing over-analysis and justifying a move. Oh, see, it happened because of this. Oh, that was a 1, 2, 3, 4, 5 retracement. Oh, get out of here. Leave me alone. I got a whole book over here somewhere on Elliott Wave. I should just, if I didn't have smoke detectors in my house, maybe I can do a show from outside. Where's that Elliott Wave book? And I'll just light the book on fire on the show for you, just to show you my true thoughts about Elliott Wave. Now that I've just bashed that one all to hell, let me go back and really go to what's really important. And it's this. It's this picture. I don't want you to think of all this other stuff. I just want you to look at price from this perspective. It's moving where the red line is. That's it. Everything else can just disappear, in my opinion. You want to look at an impulse move, which is a strong move to the upside, followed by a correction, a pullback, right? To me, that's the gist of it. Whether you're a long-term person, you're trying to do that on a weekly, maybe a monthly time frame, looking for the next move up, and then a pullback. Why do we care about the pullback? Well, because I could short that if I wanted to, but odds are that's going to give me a better buy point. Flip this whole thing upside down. If markets are, at some point, they will, turn into a downtrend and we have a bearish market, great. Then your impulse moves will be the down moves, which means you want to be a net short. Yes, it will give you some opportunities to buy when things bounce back up on their corrective phase, but that corrective phase is trying to show you where is that next supply level so you can short this thing again, because the next wave is most likely down. I don't care if it's 3 waves, 10 waves, or 1,000. Just that basic building block is all you really need to know. The step up to 1 and the retracement to 2. That's it. Period. Done. Elliott Wave lives matter. No, look, to each their own. I don't like I don't like analysts, let's say, that are always justifying after the fact and making excuses, right? To me, shut up and get in the trade. Put some trades on and have some money on it and document your trades. And I just don't know anybody who's been that great as an Elliott Wave practitioner doing mega cycles and super cycles and all that stuff. Look, I'm not that long-term of a trader. If you are the long-term investor, it might be beneficial. But to me, I'm just looking at that shorter-term time frame, whether that's a couple days or a couple weeks. That's easier to work with. Let's see. I saw something about Jeff. Where did Jeff give away some books as prize? Okay. I'll accept any options. All right. Maybe I will do that. Let's see. What else do I got? There's a predictable. If it were this predictable, I would have been rich by now. We all would have been. And again, I don't think our job is to really be predictors. We're trying to put probability in our favor. But like, I'm not, when I'm playing blackjack, which I love blackjack, I don't do it as a gambler. I do it as a profession. I'm meticulous with my strategy, and over the long haul, I've made money at blackjack. I know it seems odd because statistically you're supposed to fail, but there are things you can do and rules that you can follow that will, over the long haul, make you money. The question says, if it was that predictable, we would have been rich by now. I'm not trying to predict that next card in blackjack is a 7. Right? I'm not trying to get a 7. What I'm doing, if I'm in that mode, so let's say I've got a 14, right? And I'm trying to get 21. I'm not trying to get a 7. I'm trying to get anything under 8. And I know that there's 13 cards of each suit. So if there's 13 cards of each suit, and I need 7 of those 13, I have over a 50% chance of getting the card that I need. Does that make sense? I mean, that's really all I care about. I just don't want to bust. I don't want to lose. So in blackjack, I think the analogy is rather simple here, and it translates well to trading. I'm not thinking about, okay, it's going to hit my target. Obviously, I want it to. I want to draw the 7 and get a 21, but I also want to make sure I don't bust. So if I'm in that situation, and I need a 7, I got a 14, and I know the odds are in my favor, just slightly, like 52, 53% chance in my favor, I'm going to take that chance. Same thing with trading. As long as my risk is calculated, I'm okay with that. Am I going to always hit my target? No. Sometimes I might just get a couple points out of it. Great. I made something, but it's probability. I'm not predicting that my card's precise. I'm anticipating the direction will be one direction or the other. Okay. Let's see. Where did the Jeff... I was in live at Future Session this morning with Jeff. Mentioned, yeah, well, tell him I texted the guy and messaged him, told him to come on the show, and he hasn't responded. So that's on him. Yeah, you're right, Alpha. Jeff does use some strange numbers with regards to fibs. It's not always the standard numbers that most people use. Harrison says I usually come out on blackjack too. Yeah, but again, here's the thing, and Harrison, you can chime in on this one if you like. Are you coming out ahead on blackjack because you're always changing the way that you get a 16? You either always hit it or you don't. If you keep flip-flopping, you're not going to be consistent, and you're not going to get those results. To me, the key with blackjack is to be extremely consistent and precise, and that's why you go back and review. You read books on strategy and tactics with regards to blackjack, but trading's the same way. It's making sure that we don't change our strategy all the time because you won't develop any sort of consistency. Let's see. What else we got? Smoke signals with my Elliott Wave books. Great. All right, let me, if you guys have any last minute questions, send them on in. I want to go to your economic and calendars for Monday's session just so we can get that out of the way and I can wrap up and take a nice little sip of whiskey here. Next week on Monday, it's not the busiest day with regards to economic announcements. There is an interesting one for the U.S. You have durable goods orders. It's obviously very important. Those are big ticket purchases. TVs, washing machines, washer dryers, that type of stuff. If those numbers come out real good, that's a sign that retail sales numbers could be much higher. And of course, as we talked about, consumption is critical for markets moving to the upside. And I think that the expectations here are probably pretty good, that there will be a significant decline over the previous week. There was a little bit of euphoria, or previous month, excuse me. But 7% still is a nice number. That's a good number to have for durable goods orders growth, and that might be a fuel for our markets. All right, Monday is a boring day with regards to earnings announcement. Snore. I'm not even trying to read all these names. We've got SAP, BASF, XNP or NXP Semiconductors, UCB, Alexandria Real Estate, and Kuhn Nagel. I don't know. I don't even know. I know a couple of these companies, but honestly, I really don't care. There's really nothing. As I mentioned, the big news for next week, the major day will be Thursday. Wednesday is going to be very interesting because Facebook will be reporting earnings, and Facebook has been one of those that's been very instrumental in this market rally. But let's not forget what happens on Tuesday. I'll certainly talk about those more on the Tuesday show or Monday show when we get there. But that's pretty much it for today. What are the questions you guys have? You got any questions for me? I know I went on an unsolicited rant on a few different topics out there. I do have a bunch of different guests going to be on next week. I have Tilly Allison on Monday. I believe I'm going to have Ryan Cook of Online Trading Academy on the program on Tuesday. I'm going to have Sam Evans on Wednesday with his partner. I'm excited to meet this guy. And then on Thursday, I'm going to probably have Corey Lane on the program talking options. So we'll go over some market stuff. Of course, if there's any specific thing that you would like us to answer or chart you want analyzed like today, I do appreciate all the comments and questions that came in. We had from Abdullah and Gary and Armando sending questions. Of course, the normal chat. Thank you guys so much for sending those in. I appreciate it. Oh, you want to look at Amazon, right? Amazon's Thursday earnings, but earlier, David, you had a question on Amazon. Let me scroll back through here. And Steve, you wanted to know about gold and silver. We talked about that a bunch over the last 2 days, but I'll do it again. Let's see. Where was the Amazon question? You might want to retype it in if I can't find it, because otherwise I'm going to spend all my time scrolling trying to find that Amazon question that you sent in. Yes, Kevin, that's a good point. He says I was so close to buying a gold 180 and a silver 35 put. The rubber band must snap. It really should. Let's take a peek at those charts here real quick so you guys don't have to stare into my left ear. I'll bring up just SLV and GLD to make it easy. Silver, we had a little bit of a holding pattern yesterday, which was a bearish Harami. Today, we have an inside day, right? We're within the boundaries of yesterday's trading session, which again is a period of consolidation. This may start to form what's called a bullish flag formation. So I wouldn't be too overzealous and try to jump on this. I do agree with Kevin. I definitely think that this is due for a retracement. Again, look at these gaps. I mean, you have multiple gaps that have yet to fill, and they probably should, right? There's a gap, a huge gap right there. There is another one right here. There's like multiple gaps in this bad boy, and gaps generally tend to fill, and we just have not seen that here with silver. I mean, look at the 3 just gorgeous runaway, breakaway gaps. Today, sideways action. So definitely needed a pause. You've got GLD as well. GLD looking better. You have what's the potential for almost an island reversal, but you'll notice this also has multiple gaps that have yet to fill. It has been a huge move to see a commodity like gold rally as much as it has in the past 6 sessions. You're up 8 days, 6.26%. That is pretty impressive. To me, that just further bangs the drum of why people are nervous about, or that people are nervous about the markets, that we're starting to see more fear come back into the markets. What was the other question here? You had some really good ones Friday. Ross Cameron, bring him on. Bring who's, I don't even know. Bring him on. Bring Ross Cameron on the program. Why not? I'm happy to more guests. I just don't reach out to everybody. I'm terrible at being a guest recruiter. I'm a horrible networker. So if you guys have somebody you want to be on the program, you have my blessing to reach out to them and say, hey, you should come on the Trader Merlin program. I'd be more than happy to bring on anybody except one individual, and all the people that work for him are not welcome on the program, and you guys all know who that is. Let's see. Okay, if you want to be looking at Amazon going in earnings, you got it, David. AMZN. First off, stay the hell away from it. I'm just going to say that. I think you got to stay away from Amazon. I don't know where or what in the heck's going to happen with Amazon. I will tell you that I will be playing it after market. After market, I will be playing on that day. I may have to change my rules because Apple, Amazon, and Google report earnings. I'm not supposed to trade Apple, but I'll tell you what, the last 3 earnings announcements they've had, I would have made a killing. I had the button and ready to press, and I just didn't do it because it's in my trading plan. I may revise it out of my trading plan so I can finally trade Apple again because it's one of my rules. I'll be trading the equity markets because options will be closed, but what I'd be doing with Amazon is I'd be looking for way out levels. Like, is it possible that Amazon gets all the way down to 26.89? Yeah. But you know what? I'd probably be looking at a potential buy point. I would want to wait to see what happens after it opens up. It'll open up and just be really wild and rip one direction or the other. It's going to have a huge swing. Which way? Hey, man, I have no clue. I have no idea. I'm not even going to try to predict which way this is going to go. All right? No clue. Yeah, I saw that, Big Ev. Amazon said they'd spend Q2 money on COVID safety. I liked it better when they said they're going to spend their money on cloud computing and things like that because that was a major investment going forward. We don't want to get into a big discussion about the whole COVID thing, but I just, my gut tells me this is going to slowly dissipate and slowly go away, and then we'll stop wearing masks and realize, you know what? It's actually okay. It's dangerous if you have an immunity issue. Yes, you should be careful. We'll have a vaccine at some point, which I don't think will actually help much. But, we'll get back to our normal lives. And I think that might not be the best money spent for Amazon. But, hey, who am I? I certainly am not no Jeff Bezos. Okay, there you go, David. We'll definitely be watching this one as they report earnings. We'll obviously be doing the show live, so I may have some trades on at that point on Google or Amazon. I'm not sure which I will be in, but we'll wait. If an opportunity presents itself and it comes right up to an area of supply or demand, as Tesla did on their earnings announcement, I'll be taking that trade, and we'll let you know when that happens. All right, everybody, as you guys, as Randall says, hit that like button. Come on. And by the way, I apologize. Domesticated Rat. Thank you so much for the contribution. I do appreciate that. You will. I was going to say you bought me a drink at the local watering hole, but as we know, there are no local watering holes. So as I'm doing online trivia tonight, I'll have a cocktail in your honor. So Domesticated Rat, thank you so much for the contribution. I appreciate it. Again, if you guys have questions that you want answered, I'm happy to answer as many of them as I can. I have to probably tone down my meanness towards particular individuals, but it is what it is. If you have something particular you want to talk to me about, you can always go to tradermerlin.com and send it in there. Otherwise, put it down in the comments below the video. Hit that like button. If you are new, hit that subscribe button. That always helps us out. So thank you guys very much. I will see you on Monday. Have a fantastic weekend. Go do something fun and enjoyable. I'll see you Monday.